All right, guys, good afternoon. Gonna go ahead and get started. Today we're gonna be talking about the new indicator that I just got finished making for the premium members here. And like I said before, it's kind of a mixture of the indicators I was using, and then went and wrote some script so that we could have kind of some of what I thought were the most important aspects of the DV trends, which we were using for a while. But some of the motivation behind this is that I get a lot of you guys in here. One saying you don't pay for the the upgraded version of TradingView, so you don't have a lot of slots for indicators, which makes it difficult to use and track kind of what we're doing, especially what I'm doing, but also some of the other analysts that are also calling out things. They have their own indicators they like, so it can make it really difficult to follow all the different charting that's going on if you don't have the proper amount of slots for indicators. And so I combined the Smart Money Concepts indicator, the liquidity indicator, the time zone macro indicator that we were using, and then wrote the script for the EMA triggers with the candle color coding. So that's what we're going to be going over today. First, I'm just going to go over some of the settings, and then I'm going to go over how to use the candle colors in order to take day trades and scalps using the 1 minute and the 3 minute time frame. And we'll look at a couple different tickers using the indicator as well. So the first thing I'm going to do is just jump into the settings and show you what my settings are. You are welcome to, adjust the settings how you like it. But this is what I'm using. So if you're following along on your chart with what I'm charting, having my settings are going to help you be able to follow along and see exactly what I see. So we'll go ahead and open TradingView, and I got my indicator up. I did mention in the premium section that there was an update I did overnight. It was to smooth the moving averages so they're not so jagged and choppy or like steps. So we did get the shorter time frame are more smooth than the higher time frame ones. But I did get like the 3 minute, 5 minute to smooth out pretty good. So I'm going to go ahead and open again the settings. We're just going to go over some of the settings. So I don't mess with the EMA length and the smoothing. If you want a more smooth, you can change the smoothing length up higher. The higher you go, the more it's going to smooth. I did have to make some adjustments with the coding because when I did the smoothing, it was actually changing where the EMA was being displayed, which then was skewing the candle coloring. So I got it to, I figured out how to get it to smooth without actually adjusting the EMAs themselves. So I don't know that I'd mess with it too much, but if you do move that up, it's going to get more smooth. With the Smart Money Concepts, we got the historical mode on. That we don't use the candle coloring on this part of the indicator because we have the candle coloring on the EMA. But if you end up turning this one off, which is not how we're using it, but the Smart Money Concepts, it also has its own candle coloring coding. We're going to have the real-time internal structures turned on. Green, actually, I like white for the bullish and red for the bearish. That one's just going to show you change of characters, break of structures. I got confluence turned on. I don't have the swing structures turned on. Swing structures are just going to show you those larger breaks of characters, usually on the higher time frame. But because most of what I do is scalps and day trades, I have only the internal turned on. Order blocks, I'm going to have the swing order blocks showing them 5 most recent. The ATR turned on instead of cumulative mean range for the order blocks. High, low, and my order blocks are all gray. I have the equal highs and equal lows turned off. I have the fair value gaps turned on with auto threshold set to time frame chart. Bullish fair value gaps are green. Bearish fair value gaps are red, extending out 50 candles. And I have the daily, weekly, and monthly turned off on the high and low multi-time frame. So these we also have in another indicator, so you'll see where I have them turned on somewhere else. But this will just show you the daily high, the weekly high, and the monthly high. And then I have the premium discount zone turned off, but that will show you the most recent premium and discount zone. You can toggle it on and off and play with that if that's something you like. I choose not to use it. My settings have session drawing limit 30, time frame 15 minute, time zone GMT4, which is New York trading time, which is what I also have my chart set on. I am on the Pacific coast, so this is not my time zone, but I keep it set to New York time. That's what ICT teaches when he teaches to his students, so I keep that as well. Label size normal, text color 1. I do not have drawing cutoff time selected. So this is here, starting with this settings that we after the premium discount zone. This is the kill zone section of the indicator. Okay, so the kill zone is going to give us these gray boxes that have the different macro time zones that we're watching. Inside the kill zones, I have show kill zone boxes, text display on. I have all the boxes checked. I do not have anything in the labels box. So this blank box here, this is where you would label the kill zone. I don't have my kill zones labeled. You can, I just choose not to. 10 to 11 o'clock, I have set color white. This is the silver bullet. So if you were going to label it, you might label it silver bullet like that. And it would then show up wherever the silver bullet macro inside, you can see right there, it shows silver bullet. So I don't like that. It just, it kind of overlaps with the candles. I think it makes the macro time zone there's too much stuff going on in there. So I don't need it. I know what time zones are what. So I leave that blank. That's 10 to 11. I have the color white. The next one, 2 to 5 a.m. This is the London macro. Okay. Also white color. The next one is New York AM. This is our pre-market macro. Kill zone 8 to 9:30. Okay. The 12 to 1300 or 12 to 1. That's our lunch macro. And 1330 to 1600. Or 1:30 to is that 3? Yeah, 3 o'clock. That's our PM session. Okay, box transparency 80, text transparency 50. I got show pivots, stop once mitigated, and show pivot labels. And then here's where I have my kill zone labels, high and low. Oh, that one didn't adjust. SB low. So these are instead of inside the box, it just has a label at the high and low. So this one will show our silver bullet high and low, London open high and low, New York AM high and low, okay, New York lunch high and low, New York PM high and low. I got the pivot style solid with a thickness of 2, midpoint dotted, thickness of 2. Kill zone range, kill zone average is turned off. Average length 5, table position top right. You can adjust that. That's a preference thing. Table size normal. A lot of these sizes, that's going to be up to you. I like things that are thicker. I can see them better. They're more dominant on the chart. And so I choose to have lines a little more thicker. But if that's not, a lot of the cosmetic stuff, that's going to be up to you to determine how you like your chart. Then I have the daily, weekly, and monthly open. And I actually want to turn those all white as well. That's my color preference. And that's going to show me the new day open, the weekly open, the monthly open. Those are just going to be targets if we're above and below. Also, solid style 2. And then I got day of the week labels, which will show across the bottom, and hide weekend labels so it doesn't show Saturday and Sundays. And then my opening prices, I have true day open. That's only going to show on futures. That's going to be the true day or the midnight 00 to 001 candle. And I have these all white as well. These are just going to show up as lines with labels. I got the 8:30 data. I got the 9:30 open, and I have the silver bullet start timestamps. Okay, so these will give me levels that will extend through the entire trading session at these specific time points. And those are important to me. These are where the 8:30 and 9:30, the data in the open, those are usually going to be our bull bear pivots. Sometimes that'll be a chop range, and the silver bullet, if it falls in between there, can actually be like the true pivot. but I'll show you that on the chart here in a minute. Timestamps, I don't have anything on the timestamps. And then we go into the liquidity level section of the indicator. I have liquidity levels on, high time frame chart, left bar's 15, right bar's 5, checkbox mitigated, show, candle type close, display style lines, extension options current, display limits, okay, 15, line styles, solid, low line, high line, solid, width 2, high line, low line are both white, a high box BG, blue, low box, red. I don't use the boxes though. So those are the settings, right? And then I have those saved as my default settings. So now I'm going to go into the indicator itself, and I'm going to show you, how to use those different things. Also on the style, there are some other things. These are again preferences. I have my EMAs all set at 3 thickness and just line, but you can change any of those. Those are preferences. And then there's some other things you can change as well. I don't mess with them too much.
Hey, Rustik, could we get screenshots of those settings at some point?
Yeah, I'll put them back. So I did put them in the indicator section itself, the Rustik charts and indicators. But I think those were the original settings. So I will go and update them with the new script and the new update with the new settings, because they have changed just a little bit.
Okay, cool. Thank you.
Yeah, I'll make sure they're in there.
Cool.
Okay, so now if we're looking at the indicator itself, just want to show you some different things before I show you exactly how to take the trade. So I was talking to you about the 8:30 and 9:30 timestamp and the silver bullet. And what I want to show you here is on Friday's price, these are going to be our pivot points. And it doesn't matter which timestamp comes in which place, they're just your pivots. So in this case on Friday, 9:30 open was the lower of the two, 8:30 data was the higher of the two. So out of the gate, those can be our pivot points. Okay, 9:30 would be our bear pivot. Below 9:30, we would target sell side liquidity levels, or we would target order blocks or any like fair value gaps that haven't been touched yet. And so you see here, we have our 9:30 open, and price drops through it a little bit, and it goes down to test this sell side liquidity level. It ended up finding support, but that's just kind of how the pivot worked, right? Below the pivot, below the open price, in this case, we can target sell side. Below that sell side, we could target the order block below. And then if there was any additional targets, which I don't see any showing up here, but if we just kept falling, there would be additional targets to look back on and see where those were. Because of the range being so high or so wide in this case, sometimes these 8:30 and 9:30 are stacked really closely. The 8:30 bull pivot is quite a bit above by about $3. So above the bull pivot, we can target other, liquidity targets above there. So you can also see we tested it, but we didn't really get much above it. And then once we were above it, we tested some other previous levels, right? There was a previous silver bullet macro level here. There was a London open macro level that on buy side that we targeted. There was a previous New York PM session macro level that got hit. There was also the daily EMA trigger that we ended up running up to. So above the bull pivot, we can target some of these other lines that are behind us. Okay, those are just going to be buy side targets. There's going to be liquidity at all those levels. Now, once the silver bullet macro opened, which is, we have our New York AM session here. We have market open in this dead zone where there's no gray box, and then we have our silver bullet. So now that silver bullet time starts there. We have a new level, and that can act as a true pivot in between the two. So above that silver bullet open, we can target that 8:30 macro, which was our original bull pivot. Below the silver bullet, we could potentially target this 9:30 open price. Okay, so it can act as another pivot when we have a large or wide range in there. So just knowing that those levels, that's the kind of importance that shows us. We can use those as our potential pivot points. Now, if we go back to the previous day, I think the previous day had a little bit if I remember it right, it had a little bit tighter range. Let me see here. Yeah, so here's our 830 and our 930. There's not even a dollar difference between those two prices. Okay, so although they can still act as a pivot, it's just a tighter range, and our silver bullet is above 930, so it's no longer going to act as that same kind of pivot. Instead, our 830 and 930 are going to be our bull bear pivot. Above 930 price, we can target additional things, right? Once the silver bullet starts, we can target the silver bullet level if we're below it, and once we're above the silver bullet, we can target additional 830, 930 daily open, right? Daily EMA. And then ultimately there was another macro level up here that we attempted to hit, but didn't quite get there. So above that pivot, again, that 930 pivot, bull pivot, we can target all of these liquidity levels that are coming in from the previous day or the London Open or any of the other macro or triggers above us. Okay, same thing if we're heading down. If we were below the 830, which we did dip below just very briefly at some times, then we could target this daily open, this old silver bullet macro start, and then there's a couple other small levels here, and then there's also this order block here. So we have lots of different targets that show themselves whether or not we're above or below the bull pivot or the bear, or above the bull pivot or below the bear pivot. Okay, so that's just using those timestamps, and that's what they're going to be good for. Now, when we look at the candle coloring and the moving averages, okay, I want to explain. These are just it's not rocket science to what DV Trends was doing with their indicator. My motivation for adding the EMA triggers and the candle coloring is that, DV Trends came in here, offered us a discount on his product, but what I get, the feedback I get is, hey, Rustik, like, you're asking us to buy Gamma Edge and it's $150, and you're asking us to get DV Trends and it's $150 for 3 months, and all these costs add up, and then you're already paying for your membership, here at RawStocks. So how can I try to save you guys some money and still bring you maximum benefit for the tools that we really need in order to get the job done? So that's why I was like, I'm just going to try to figure out how to take some of what I think are the best components of the DV Trends and add it into our indicator and offer it to you guys at no cost. So when I broke down that DVT Trends indicator, what I saw was the main components was the EMA triggers, the candle coloring, and then they had that oscillator that was down below, but that oscillator wasn't anything special. It wasn't much more than a fast trender, like a BX trender type of deal, or similar to the RSI. I think they used it wasn't RSI, RMA or something like that, and some fast trend stuff, and they just had some fancy ribbons and colors, and they were able to pull a little bit of like delta volume data in there, but I didn't think that the oscillator was what really made that. I didn't find it particularly useful. Had a lot of kind of false signals with the delta stuff, and so looking at just the EMA triggers and the candle coloring, I see that there was a way to use that in order to take these trades. So that's all these are. White EMA is 3 minute, teal is 5 minute, blue is 15 minute, yellow is 1 hour, red is 1 day, and then purple way up here is 1 week. Okay, so that's just going to be our EMA moving averages. Now these are what we call a MTF, or multi-time frame EMA, so they do not change no matter what time frame we're on. That was another key feature of the DV Trends, is like most time a moving average indicator will track a certain amount of candles. So if we're on a 3 minute chart, a 3 minute EMA is tracking 3 candles back what the average is on any given candle moving forward. It's always looking at 3 candles back. Same thing, 100 period EMA is looking at 100 candles no matter what chart. So if it's 1 minute, it's looking at 100 1-minute candles. If it's 1 day, it's looking at 100 days, right? So that those levels are changing constantly. I don't even want those levels to change. We want them to be static. So that's the MTF EMA multi-time frame, and it will show the same on every chart. So using the multi-time frame EMAs, I programmed my own candle coloring logic, and what I asked for the coding to be is that when we cross over the 3-minute EMA, I want a candle to color white. Okay, they're what I'm calling our transition candles. So we're moving from red to green, or we're moving from green to red. And when we cross that fast trend or that 3-minute EMA, I want to know when that's happening, and it's going to show us white candles. Okay, now where we get multiple white candles, because I also asked the coding to only provide us 2 white candles. Or maybe I said 3. It was 2 or 3 white candles as transition before price before the candles colored green. But what happens is that, you can see on the screen or on the chart here, we got 1, 2, 3, 4, 5, 6, 7 white candles. Well, that's because we have candles crossing back and forth over that 3-minute multi-time frame EMA. And so that's triggering the coding to say every time we cross over or under, it is counting that as the first white candle. So we cross over, we cross under, we're now second under, now we're over again, now we're under, right? So these were our white candles, and that's why they were why we had so many of them. But then over here we get 1 over, 2, 3, and then we change to green. So those were all over, and then we get our shift in order to see that the coding is working properly, to then give us our green candles for our trend. So how do you trade using the white candles? So there's two different ways as far as chart times go that you can do this. Either way, I think is going to be fine. One of them is going to be a more conservative approach, and one of them is going to be a more liberal approach. But I'm going to show you all of them. Okay. So 1 minute or 3-minute is the time frames you really want to be looking to trade this strategy on. And then your stop loss is what's basically going to be the more conservative or more liberal approach. Okay, so basically the strategy is to take the first white candle or the first white candle close when we get the trigger signal. Okay, so price moves up over the 3-minute EMA, right? Candle closes, we take our entry. In this case, it would have been a long entry. And then there's, like I said, a conservative approach to this, and there is a liberal approach to this. So we'll go with the conservative approach first. The conservative approach would be to set the stop loss at the first triggered candle's low, and then give yourself, at least a 1-to-1 RVR, if not more. Okay, you can see this ends up getting stopped out, which, that happens. Sometimes that's going to happen. Now, your more liberal approach to the same trade would be to set the stop loss, roughly down at the previous internal swing low. Okay. And because we're options traders, we're going to have, it's not going to be a easy calculated stop loss. We're just going to be watching what price says when we get back down to that point, because we did hit the low, but we didn't have any candle close below the low. So in this case, it wouldn't have been a stop. We'd be waiting to see if we closed a candle below this stop. Okay. And then you're going to, again, set it at minimum a 1-to-1. Okay. So on the more conservative approach here, you can see our take profit is right about here at a 930 target. There's a pretty good chance we're going to get up to that. For confluence, I'm going to use some other smart money concepts to see what is in that area, because I don't love specific price levels themselves. I like ranges. That's why I like the smart money concepts, because it gives us breaker blocks, fair value gaps, order blocks, and other kinds of blocks, which are ranges, not specific levels. So I'm going to see that there is a fair value gap here. And some of this just takes, understanding and knowledge of smart money concepts, because that may or may not show on the indicator. You can see we have a bullish fair value up here, but I don't remember if this one shows because it's been mitigated now, so it's off the chart. But there's a fair value up here, and there's that 930 level. So you can see our take profit is inside that fair value gap. And what happens, right? We took the entry, the conservative stop. Okay, price did come down, and this is the trade. We took this trade. Price comes down, and it gets up into our level, and so that ends up being a $2 move on the underlying. So it's going to be somewhere around $100 per contract if you took at the money, or you could have tried to take out of the money, right? With whatever your target was, which would have been like a 477, something like a 477, 476, 477 call in that case. Okay, so that's one example. Now, what I also want to show you is same trade on the 3-minute chart instead of the 1-minute chart. The 1-minute chart is, and anybody who's watched any kind of moving averages is going to know the 1-minute chart, when you're when you're around a fast trend, like a 1 minute, a 3 minute, a 5 minute moving average, you're a lot more likely on a 1-minute chart to experience chop on those moving averages. And so anybody who's ever traded or used like the automated moving average strategies, sometimes like the fast trend crossover, the slow trend or medium trend kind of automations, you'll get a lot of stops. You'll get a lot of like automatic stop outs. Eventually something will trend in your favor and you'll get a nice big trade. But a lot of times on those short time frames, you get chop on those short time moving averages. So let's pop over to the 3-minute chart and look how that was a little bit different of a trade. Okay, so here we go. Same trading day, Friday. Okay, 3-minute time frame instead of 1-minute time frame. Same concept. First white candle. Okay. Entries a little bit later. So we're entering here. Oops. We're entering on that first candle after the close immediately. Right. And we're going to set our stop loss at this candle body low. And we're going to set our target at a 1-to-1 minimum. Okay, it's a $1.13 move. So not as much because the stop is smaller. If we target a 2-to-1, okay, a 2-to-1, where's that? Again, puts us right around that 930 open. We also see that similar to same fair value gap on the 3-minute chart. Inside where our take profit is. And you see on this one, even though we didn't hit it immediately on the move up and we cycled back down, right? Here is our stop, and trade runs up, hits our take profit, right? On that second move up. So, but we didn't get stopped, right? And then how we can run that is we can also move our stop up, right? If we want to make sure we don't get stopped out at all, or you can just remain that stop the same. I probably would run that stop the same until we started to make this move up, and then I would start adjusting, because we have this low, we have a swing, an internal swing high, then we have another internal swing low. So what I would do if this was my trade is when we started moving back up and your stop didn't get hit, I would then move my stop up to that internal swing low, and then that becomes a 5.77 RVR. Okay, and then as we're moving up, you can start to actually adjust that stop to break even, and actually adjust that stop to some of these candle wick lows in profit. And you can just keep moving your stops up until you either hit your take profit, or you let it keep running and you come back down and end up hitting one of your stops down here. I don't usually recommend letting your stop get hit if you're in profit, because of the way options move so fast. Is that the difference between this wick high and trying to close out, on the move up, where delta is actually working in your favor because we're moving up quickly, versus the move down. Delta starts to shift and that contract rapidly declines in those down closed candles. So, you could see a difference of like 30% or 40% all the way down to like 20% in just like 1 or 2 candles that move down. just because of how delta works. So that's an example there on QQQ using again the 1 minute and the 3 minute chart. Now let's look at the more conservative approach, just, you know, because even though we already know that the more aggressive approach on the 3 minute worked in this case, but same thing here. If we set our stop loss down here instead, we could then potentially look at the 2-to-1 with the deeper stop loss. And let's just look over the course of the day. We end up hitting that one as well. And so, you know, using the 2-to-1 ratio, depending on where you put your stop loss, is going to give you, you know, higher target, like take profit targets. With scalping on SPY and QQQ, you know, my observation and what I've noticed is that you want to grab the moves, right? Because when you cycle back down and make that move back up, theta is decaying these 0 days. Now, if you're further out on time frame, by all means, let them run. But I like to go for the ride, get out of it, come back down, look for another entry, right? If you're a scalper, there's opportunity here in every move, right? Because we have that move up, right? We capitalized on that. We got our green candles. We're at a 1 hour EMA. We failed to stay above it. We get our first breakdown candle. We also could take that trade. Now, my bias was bullish on the day, so I don't know that I'd be looking to take shorts. But if you are a good scalper, or you think you are, you can also take this trade, right? Stop loss again at this candle, going for minimum 1-to-1, right? You can see we hit. Looking at a 2-to-1, we came just shy of it. I would have been targeting, you know, potentially this low right here, which we hit, and then we have a fair value gap and we have an order block. But what doesn't show is that we had another order block right here, and we hit that. Okay, so we hit consequent encroachment right to the tick. So would be looking at those on the way down. Once we crossed over a 1-to-1 and targeting a 2-to-1, I'd be looking like, where's my liquidity at? It's at this sell side wick. It's in this order block. It's in this fair value gap. It's in this additional order block below us. Right. And then way down where we start to get red. Once we get the colored candles, that's where we start to look for our closes. Okay. Our closes, once the candles have shifted to the color of the trend, that's where we're looking to, you know, we're looking at where is our target to take the exit. And then we're looking for our next white candles that we can take another trade in. Once we're out of the white candles and into the colored candles, that's the go zone. That's the profit zone. That's where we're looking to, again, take our profit somewhere in there. Now we get more white candles here. This one would have got stopped if you took the conservative or the liberal approach to the candle close, right? We popped down below it. We get stopped out on that one. Okay, if you took the more liberal approach, because you can always adjust up. Now you're obviously risking more by having a deeper stop loss, but you can see even though we wicked down, we didn't close below the stop. Okay, and we have a 1-to-1 minimum objective target, or we could target the previous high right here. Right, we can also target any of our macro levels where we have all of these different lines that are coming across. These are all preset by the indicator, right? This is a liquidity high. This was a daily open level right here. We also have old silver bullet. So it's just, you're looking at like, what's the nearest term liquidity for that kind of low hanging fruit trade. So let's just say we ran it to that first target. That's a 1.36, right? The next level that's given to us is a 1.68. We ran it up to nearly the 2 at the daily open, right? Or we could run it up here to 2.4 using that stop loss. Now, as the trade goes in our favor, again, we're moving up to previous candle body close lows, right? Eventually, we're moving up to break even as that trade, seeing candles go green. Okay. And we basically hit the target on that. But you could scale out. I mean, I think that's what I was doing. I'd have to go back and look at the trades that we took on Friday, but I was running a lot of 5 lots on QQQ or SPY, and then taking 3 off the table as we start to hit the levels, and then letting some trades run, letting the runners run to some higher percentages, right? And that's just all using like all just these pre marked out levels. These are all given by the indicator. It takes the guesswork out of it, right? Run, if you're running multiple lots like 5s, take the first trade or the first contract or 2 off at the 1-to-1, right? Then target whatever the next level up is. At that point, you're not running like 1-to-1, 2-to-1. You're just looking, what's the next level? Okay, take another contract off, right? Hit the next level, take another contract off. If candles start changing from green to red, or green to white in this case, because we were moving up, right? You can take you can take everything off the table. So when we dip back down, even though we've closed 1, maybe 2, maybe 3 of 5 contracts, and we get up here, right? And we start to see some wicks rejecting this next level we're trying to get to, we can either close it out or we can wait. We get white candle, close it out back at one of these levels that we originally closed out some trades at. Okay. Similarly, if you're looking to just go back and forth, here's another white candle. We get stopped out on that one. Okay, we push back up. Would not have taken a trade here. And then we get another white candle here. You can see it's a short. If we take the liberal approach there and we look at a minimum of 1-to-1, it's not a very big trade. It's 50 cents. So you're talking like $25 on a contract if it's a at the money contract. Nothing crazy. You could target this previous low here, would be the ideal target. Makes that a 76-cent move, a 1.43 RVR, and it hits just a little baby scalp there. You could have also taken the more conservative, or sorry, the riskier stop loss back at the old highs. That isn't even a 1-to-1. The 1-to-1 does hit with this wick here. So still a good trade below this liquidity level, right? And then we start to get candles that show us we're going back up. And so again, if you're, my bias was bullish, so I wasn't taking any shorts, but I'm looking for longs. So I take this trade here, right? My stop loss is at that candle. I like even though your stops will probably get hit more and it could be frustrating, I like the stop at the candle close. You can always re-enter the position, but I like the stop at the candle body lower high, not the previous lower high. Just because the risk is higher. If you put the stop down here and if it gets hit, then you got more work to do to try to get that money back. So I'd rather get stopped out and then re-enter if we do drop, or if it gives us another white candle to enter in. But here we got our entry point, our stop loss. We're going to target the previous high here, or at least a 1-to-1. This one's a 2.28-to-1. Okay. And you can see entry runs up. It's $1.14. So I don't know, $50 on a at the money contract, something like that. It ends up getting hit. But it's getting late in the day. So in this case, I don't know that I'd be looking to like hold contracts, and I don't know that I'd be looking to like scale out when we're in the PM session. Okay. Back here in the silver bullet or in the lunch macro, and you're running 5 lots, like by all means scale out. But we're getting into that final macro. It's in and out. 5 contracts in, 5 contracts off. Just scalping what you can if you can. And then I wouldn't even have traded this. This would have been that like end of the day pump, and I don't really play those final minute lottos, but I know that like something like SPX, if you like SPX and you like lottos, you could have grabbed one of these white candles off the bottom, 15 minutes to close, and you could have got this massive move up using the same logic, right? Long position, white candle, entering here, stop loss at the previous low, or at the candle body close of that first white candle. You can see no candles close below it, regardless of which stop you used, and you'd be targeting, some of these predetermined lines here, here, here. Either of them make some big trades. Here we got a 4-to-1 that hits the daily trigger as a target. But even minimum target at the previous high would have been a 2.23, $1.47 move on a contract that had a couple minutes left. Would have been a real big banger for sure. Any questions on using the 1 and 3 minute candles with the EMA triggers for trading? If not, I'll show an example on Tesla too, just to take another ticker, but they probably perform the best on the indexes. But I'm happy to show like on Tesla as well, because I know that that's a popular stock to trade. Any questions on any other aspects of the indicator as well? Like, not just the EMA triggers and the candle coloring. Okay. I'll jump into another ticker again. Just some things that I want you guys to notice. The candle coloring and the EMA triggers take a lot of the guesswork out of things because it's a strategy, right? And you just follow the rules. You enter in the white candle, you set your stop loss and your take profits, and you just follow the rules. It makes it nice and easy. But what I can tell you is, when we have the confluence of these fair value gaps that are building, where we have a order block, a bullish fair value gap that got respected, right? And then we get more bullish fair value gaps above. Those are also being respected. That means the bias is bullish. So primarily looking for bullish entries. If we started taking like this fair value gap out, then our bias could shift to bearish, and then we could target some of these additional sell side levels, right? And again, at that point, we'd be below the bull trigger, because you can see, again, in confluence with what we were talking about, that first move that we would have caught was just respecting the bear trigger, right? And then we're above the silver bullet trigger, or that macro level, where we could say above the silver bullet, we could target the weekly open or the 830. And you see that first move went to test that 830 level. Check that out. Even though there's some other things from previous days that we could also be looking at in that same area, that first move went up to test that 830 level. We rejected it. We came back down to test that silver bullet open, and we fell through it a little bit, but we respected that fair value gap and that order block that was here that doesn't show, right? And that when we move back off that, that's confluence that we're looking for another move up, because we're respecting those levels and we didn't fall below the 930 bear trigger. And then you can see also, once we got above that 830 bull trigger, boom, like we shot off of it, right? And then we came back down to test it, and we popped off of it 2 more times. And that's where we saw that nice big move up. Make sure that you have, so somebody just sent a message, but I think you sent it in direct message, not in the chat, in the group chat. So you don't have extended trading hours on. So you need to make sure that extended trading hours are on, which will give you like the London open and the pre-market price, which is also going to affect your 830 data price, because that comes during pre-market. And then also make sure that your time zone is set to whatever time zone your chart is. Where to turn that on. So there's a little like cogwheel down in the corner should be in the corner of your chart, of the actual chart, right above where it says ADJ, at least on mine, right kind of kitty corner to where the time zone count is, and it says ETH. Mine says ETH for extended trading hours. You can click on that, and it has the option of regular trading or extended trading. All right, good. Sounds like we got it. Yeah. So back to again, like I said, those bull bear pivots and those in between levels, those are going to be important. In between the bull bear pivot is going to be chop, especially if we have the silver bullet in between those. You can see we chopped in that area, right? Once we got above one of them or below one of them, in this case above, right? Then we shot up. We tested it again. We eventually shot off of it in an aggressive way. And so very important to watch those levels. And you can take the trades accordingly, or at least build confluence in your bias, right? The bias is important when you're taking trades. When you're entering, if your bias isn't in line with the way that you're entering, then there's no confluence there, and that's a trade that you may question whether or not you actually want to take that trade, right? If we were, or at least how much you're looking to maximize profit off of that trade, I'd say would be a better thing, because you can definitely take the scalp in the opposite direction of your bias, but you're not going to be looking for massive gains on it. You're going to be looking for smaller scalps, right? If we're taking a short and we're, above 830 open, which is our bull pivot, right up here, that scalp is only looking for a small move down. Where if we're pushing up above the bull pivot here and we're taking one of these candles, we're looking for a bigger move because the bias at that point is bullish. All right, so let's pop over to Tesla and we will take a look and do the same thing. I'll look at the 1 minute and I will look at the 3 minute, and we'll just kind of notice the differences. We want to look at Friday's price, and Tesla had nice moves on Friday. So we can see we got our 930, we got our 830. So before we even, right when we get at open, these instantly are on my radar. Where's our bull, where's our bear pivot, where are other data points that are on the chart in relation to the bull bear pivot, and then we'll go from there. Okay, so we have our bull bear pivot here. Our 930 price is lower than our 830 price. Then when we go to actual market open, you can see at market open, we get our 930 candle, boom, white candle. Okay, so using that logic that we've already discussed, there's our entry point in that candle close. Here's our stop loss. It's a pretty deep because this is Tesla. It moves much faster. Okay, and let's look at our 1-to-1 minimum is a $3 move. Okay, so we enter on this candle open or this candle close, and we grab that move up there, right? We can also look for what other targets are on there. Well, we have our daily EMA trigger right here, so we also could target that, right? That makes it a $4.59 move. The risk reward ratio is 1.14. And as we saw price start to make that move, we can always run our stop back to break even, because at this point we're probably 20% up as we're making this move, maybe higher. We don't want to take a stop on that. So, if we didn't take the exit here, we would have come back down. We would have got stopped, right? But then we have more white candles. You could have tried to take the short there. You would have got stopped if you used the aggressive stop. If you set the other stop up here, you wouldn't have, and you could have taken that short back down into this fair value gap. So there's something for everybody, right? There's our short. We would have got stopped if it was the aggressive, if we put the stop at the previous high and did a 1-to-1. You can see we just barely hit the 1-to-1 target for a $3.34 move down from that white candle entry on the second candle open or first candle close. Right immediately when you see that candle close, you already got your your contract loaded up at the money or slightly out of the money. Best option. So there's your 1-to-1. Right, could have tried to run it deeper, but 1-to-1 is our minimum. We don't want anything that isn't a 1-to-1 at least. Then we get another white candle here. Okay, we would have got stopped out on Tesla on the aggressive. It wasn't a big breakout candle, so like that opening candle would have got stopped out on that one. But if you put the stop back down here at the previous low, and we targeted a 1-to-1, you can see we ran back at this internal swing high and we hit it. We would hit our 1-to-1. It's a $2.55 move. So at this point in time, we've got three pretty solid trades on Tesla. If you took all three of them, all using the same logic, again, 2 of the 3 required us to use the deeper stop loss. It is Tesla. Like I said, it moves more aggressively. Stops get hit a lot more on Tesla just in general. I've noticed, and when we traded a lot of Tesla, we just didn't run stops because you'd set it like 20%. It would hit that 20% and then go ripping on you in your direction. And so Tesla's just a hard one to run stops on. But I do think with the candle coding, it is effective if you place your stops where I'm telling you to. Now let's jump up to the 3-minute chart and kind of look at those same 3 trades using the 3-minute instead of the 1-minute and see if any of them did not get stopped out instead. So we would have got using the right here. So this one didn't get stopped out in general in the first place. Same thing, same trade, right? 1-to-1 minimum. Just comes barely short of hitting the 1-to-1. Using the 3-minute candle. And then if we look at the short that would have got stopped out on the more aggressive stop loss on this one with the 3-minute candle body close here, we don't get stopped out on that more aggressive, right? And so then our 1-to-1 easily hits and our 2-to-1 also hits. Okay. So there's 2 for 2 on the 3-minute where we would have got stopped out using the aggressive strategy on the 1-minute, which was the same on QQQ, right? We got stopped out on a couple 1-minutes, but the 3 minutes gave us the opportunity to still use that more aggressive stop loss, which allowed us to set those take profit targets a little bit lower and still get our 2-to-1. And then if we look at the long here, the third trade that we were looking at, right? First white candle body close, right? Of that first candle, entering on the second candle open or first candle close, targeting previous high. We hit that and it's a 2.68. So we're risking a lot less. We're still hitting our target. Target's the same on all the trades, but the risk to reward ratio is much better, right? And then if you also see where our entry point is, even if we let this trade run up and we just decided to run our stop, you can see these candle bodies get right down to our original entry point. They barely close below. I wouldn't call that a close below. Just it's right at it. So if you were letting it run, or you took maybe some partials off and let the runner run, and weren't seeing much effort to drop below your entry point here, you might let that run and look at what ends up happening, right? But maybe you do end up closing it out and we look for the next trade, right? And again, we can use that same logic, right? We're bullish bias. We're above our 830. So we're looking for long entries. Okay. We're above our moving averages. You see above the 1 hour, that's medium time frame, 15-minute, 1 hour medium time frame trend, right? We're staying above, we got above the 1 hour. We're staying above the 15-minute, right? And then riding these trends. So bullish bias. Okay. Taking the entry here. Again, the aggressive stop on the 3-minute, and then targeting, we got levels here, right? That's a 4-to-1 risk reward ratio, $4 move. We have a level there that's predetermined for us. We also have this order block here. If you're going for like a home run, that's a 9.85 risk reward ratio. You can see we never even come back to get close to our original entry or near our stop. So we could just continue to walk that stop up and stay in profit. We never actually quite hit that order block, but that would have been a nice home run on that one. But also there were some additional entries right here where we could have scalped trades. So lots of different options. Again, the 3-minute seems to be, in my opinion, more consistent with not hitting the stop losses using the more aggressive stop loss approach or the higher stop loss approach instead of putting that stop down below or above at those previous highs and lows. Instead, using the candle body as the stop loss. The 3-minute seems to be more consistent. The 1-minute finds us getting stopped out sometimes, but still chances to re-enter. Any more questions or additional questions now that we've looked at Tesla as well? Same thing. we got our moving averages that were above, and we also got our fair value gaps that are acting as confluence for our bias on which direction we're going. Y'all feel comfortable being able, and you don't have to unmute, you can just throw some thumbs up in the chat. Y'all feel comfortable, like, at least tracking this or paper trading it over the next week? Do you guys think it's something that you guys can use? Because my goal here was to provide, I totally understand not everybody has the time to spend years studying ICT like I have in order to, be as proficient with the smart money concepts as I am. So my goal here was to bring you guys a strategy that doesn't necessarily always require me to take the trade, and to monitor the trades for you, that could still give you nice winning trades using something that was fairly easy, that made sense, that was visually, that was easy to read visually as well, that doesn't have all kinds of crazy lingo to that sometimes gets lost in translation. So yeah, I see some thumbs up. Looks like you guys feel fairly comfortable with this. Yep. Easy. Mountaintop. Yep. 3-minute time frame. White candle. First white candle. Close. Um, you know, once we're above the bull or bear pivot, there's your bias. It's super simple. It's not rocket science. It's just, I guess the hardest part is knowing where to close, right? And there's plenty of indication using just this indicator that will give you lines across the screen. You don't even really need to know what they are or where they came from. There, if there's a line above you, that's a potential entry point or exit point. If there's a colored bar going across the screen, that's a potential entry or exit point. Exit point, whether it's on the bullish side or bearish side, like above or below us, those are potential exit points, right? So we just enter the white candles on the 3-minute time frame in the direction of your bias, targeting whatever kind of levels are showing on your screen. Other things that we can use in Confluence, when I post the gamma edge data, you can also take, like, when I post the net stat information, you can also take the left-hand plane, right-hand plane, charm, and delta and gamma levels, and you can throw those on your chart additionally if they're not already showing up as some other form of the indicator. But those can be some additional levels as well, especially because on the weekly, like if we're taking weekly contracts, even if we're scalping them, sometimes those can be some targets as well. I look forward to hearing, what success you guys have using this strategy. Like always, I encourage you guys to do some testing on your own. I mean, I traded it Friday, traded it Thursday, been trading similar aspects of the indicator for, a while. So I know that it works, but would love for you guys to get some practice in and get some feedback from you guys. And I'll just leave you with this, is that I built this indicator so I can adjust it. And so if we find that, something that you guys observe that something isn't working, or we can enhance this in any way, please let me know, because I'm happy to, make adjustments. I'm also making notes to myself if I notice that, something's not performing the way I want it to, or I think it could perform better. We'll make adjustments, but I don't want to do updates too often, because every time we update, it resets all your settings and you got to go back in and adjust those again, and it gets to be a pain in the ass. So thank you all for tuning in. If you got any questions, feel free to direct message me. If you got questions during the week, also let me know. We will be having a live, I don't know if I'm going to do it live. I'm going to pre-record at least, doing some chart setup for the next week, and then we'll be posting all the gamma levels and everything throughout the rest of the day. So enjoy the rest of your Sunday, and we'll see you guys in the trading room tomorrow.